Hi guys, and welcome to our weekly video where we are going to focus the expectations of this current week. So as always, we wait for Monday's range starting from the Asian session right up until New York close on Monday. The reason for this is so that we get to see how we can project our weekly levels in terms of price action on where we think price is gonna get to. So for the new guys in the mentorship group, take note, it's not always the case that you have to follow what will be outlined in here, but the lesson that you have to take from this is the application of the concept that you are learning, right? The weekly mentorship video is there to help you understand the concept, premium discount arrays, how to highlight them, how to apply them, so that you come to a conclusion by yourself, whether you're going to short or you're going to go long. So the levels that I highlight in this video, they are a guideline for your own analysis. Remember, I'm mentoring most of you guys so that eventually you get to do this by yourself. Not that I have to give you entries, I have to give you exit or targets or stop loss numbers. No, that is you as a trader. So that's a very crucial development part of your trading career. You should be in a position to learn that, and it's not going to be a one night lesson. It's a gradual process whereby you're going to learn, okay, we've got this premium array here, so we're likely to short from the 50% min threshold of that premium array. Then you determine the price from there. You see, not to say that I have to give you entries. No, that's not what we do. That would be basically me giving you a signal, of which I do not offer signal services. So yeah, that is out of the way. And now back to the charts. We're gonna start with the dollar index, and now we've got the September contract active. June contract expired, I think, on Thursday, if I'm not mistaken, Thursday or Wednesday last week. So what we saw in price action, I've already outlined most of what happened in the weekly recap video that was uploaded on Sunday. So what we have seen is a very strong dollar due to the FOMC report that came out on Wednesday, right? Now, already today, Monday's range, we see a correction to the downside. We see a retracement to the downside, right? If you were in class on Saturday, this was to be expected. Reason being that we have this was to be expected since we have some premium arrays that were created when we had this down trend. So those premium arrays, they are going to provide resistance when price reach out for them. Now, this momentum to the upside, that was basically the message we got from the Federal Reserve. And this momentum has set us for the next 2 to 3 months. Now, why do I say it has set us up for the next 2 to 3 months? We're basically going to see probably a market structure like this in the coming 2 to 3 months or the next quarter, right? Dollar is strong. We cannot dispute that. And what I outlined in last week's mentorship video say that the moment we just hear any suggestion that the Federal Reserve is going to ease up on their bond buying, the stronger we are going to see dollar move to the upside. And that's exactly what we got from the Federal Reserve. So what they actually did was they've pushed forward the rate cut from 2024 to 2023. They're expecting 2 rate cuts. Now, tapering precedes a rate cut, right? Meaning they are going to reduce bond buying before they start increasing the rates. It's not going to be a rate cut. They're going to increase the rates probably 2 times before 2023, meaning tapering might have already started. That's why we are seeing a very strong dollar. Now, looking at the market structure, guys, right? Number 1, you need to be able to identify areas where you are going to be long on dollar, right? Areas that are going to offer discount price on dollar index, right? That means you're outlining old premium areas that have been violated to the upside, right? Number 1, we've got this bearish order block here, and then we also have this bearish order block right here, and then we've got the third one in the range, which is this guy, right? Now, these levels that I've marked, they are going to provide support when price comes back. They are literally going to be providing support to price. Now, this week's mentorship video, guys, take note, it might be a bit long, longer than the usual, but most of the time I'm only going to spend on dollar index because it's crucial that we understand what the dollar is doing in relation to last week's fundamentals. So you can clearly see dollar found resistance here, which is the 92.34 level, right? And then it dropped, price dropped. Now, this is basically the sellers in this range coming back into the market, but are they going to sustain the drop? Now, that is the question which even I cannot answer, but I have to look at price action for me to determine whether they can sustain the drop, right? Now, they've already breached this daily old bearish order block to the downside, meaning they're literally targeting the liquidity inside this fair value gap here, right? We've got a fair value gap inside here. Let me just mark out that price action quickly. 795, and then right here. So we've got a fair value gap here in this range, right? And if you look at it, the mean threshold of this range is coming in at let's see, right around 91.60. You see, 91.60, and that's just below the old bearish order block that was broken to the downside. So the 91.60 price point, somewhere around here, is likely to provide strong support. Now, dollar is now in a weekly bullish order flow, right? Dollar is rallying on the week. We're in a weekly bullish order flow, so meaning we should expect the low of the week to come in on Tuesday or on Wednesday during London or New York session. So take note of the low that is going to be formed tomorrow, either during London session or during New York session. That low is going to be crucial. Now, we also have a lot of imbalances in this structure here to the left. There's a lot of imbalances, price imbalance in this range. Now, the impulsive move that was caused by Federal Reserve took out most of the imbalances. They are not going to provide resistance, right? Most of these areas, they are not going to provide resistance. We also have imbalance right here, right? You can see we've got imbalance right here. There's a gap in price. That's price imbalance, that fair value gap. Then we've got this. You see how price broke out in this structure here, the 90 from 90.60 to 91.30. Price was just breaking all the way to the downside. The sellers had no option but to give up, so we only had one side, buy side liquidity being offered here, right? Buy side liquidity being offered in market rallying to the upside. So in this week again, I'm going to be strong bullish on dollar index, but that is more from the 91.60 price point. The way price is going to react when it reaches that level is crucial. This is why if you are in the mentorship group, I'll be guiding you as the week goes, right? Because I'll be watching the charts probably more than most of the guys here. So I'll see how price reacts when it reaches a discount array that I'm expecting price to find support. So I'll be highlighting the levels in the mentorship group so that you guys can also understand what I'll be talking about. So you can see here, if I go to my H4 chart, we've got liquidity right here. See these two equal lows down here. There is sell stops below 91.61. We've got sell stops right here, and those sell stops are coming in inside our fair value gap on the daily time frame. You see, we've got a liquidity pool of sell stops right here, so expecting this market to drop, take out these sell stops before we could rally to the upside, or we could go as far as this bullish order block here, right? Meaning an aggressive trader, this is an aggressive long entry. Someone who's not aggressive will wait for price to reach 91.30 before they can go to the upside. You get my point? So your stops, they're right below this level. You don't want to have a big stop loss in these market conditions, because market can reverse all the way to the downside. Right here, market can reverse. There's no guarantees that it cannot, but it can reverse. But if it does reverse, pushing all the way down to this level here, this will be an ideal zone for your long entries. What we saw last week can happen going to the downside, but we need strong fundamentals. That means we need to be looking out on our calendar to see what's coming, right? In terms of fundamentals for the dollar, we've got existing home sales. Yeah, price will move, but not much. But this fundamental here tomorrow, when Fed Chairman Powell testifies to the Congress, this here we need to be on the lookout for it, because it's gonna move the markets. Then we also have crude oil inventories on Wednesday. They're definitely gonna move the markets. And then we've got the initial job loss claims on Thursday. Initial job loss claims on Thursday. Then Friday, there isn't much. Yes, there is these 2-star fundamentals, but they won't be really much of an effect. But these ones here, the ones with the FOMC, guys, they are very crucial. Market will definitely react. So we are bullish on dollar, firstly from 91.60, and then secondly from the 91.40 price points. So looking at target wise, if we are to see a strong dollar again this week, we should be reaching out for this level here. We should be reaching out for this level here. We've got a fair value gap which is still not closed here. We still have imbalances right here. You can see we've got imbalance on 92.80, 92.83, which is our institutional price point. So this is your long-term target on dollar index. Expect it to trade way above and taking out the buy stops above that level. So that's that is the focused on dollar index. If there's something that you didn't understand and you're in the mentorship group, just send me a message on Telegram. But yes, we are bullish on dollar, but expect a bit of retracement this week, and that retracement can even go as low as 91.40. You must be very crucial. After such a move in the market, there's bound to be some corrections in the market. Market can even correct all the way down to 91 before we could see another strong push to the upside. You see, like what happened here. You see what happened here. We had a strong push for 3 days, and then we had a correction for 3 days back to where the move originated. So yeah, we could see strong moves to the downside before another break above to 93.30. So yeah, dollar is bullish. Ideally, I would expect everyone to be hunting for long trades on dollar. And one other thing, let's see what the COT number for dollar index looked like. And it's a very interesting number on dollar index. The non-commercials, they've reduced both their positions, long and short, but they took off a huge chunk mainly on their long positions, right? And then the commercials have also reduced their long exposure on dollar by about 2,000 positions. But the interesting number is coming right here on their short exposure. They've taken a big chunk of profit on their short exposure, meaning they are looking to go long big time on dollar index. They're not looking for any short positions right now, the commercials, because you can see they've already taken off like 7,000 off from their short exposure, meaning they've taken profit. That means dollar is going to trade to the upside. And if you look at open interest has reduced massively by about 12,000 points from last week. That's a 24% reduction in open interest. That's why we saw this big move on dollar index. You see, if you anticipate a huge move on any asset that you are capturing the COT number, when this COT number jumps big time, you are definitely gonna see an impulsive move on the price action for that asset, right? So what you need to do, the guys in the mentorship, what you need to do is define the discount arrays on dollar index that you are going to go long from. Already I've given you sell stops there, liquidity pool. Then we've got this bullish order block here. See this bullish order block? If you look at its mean threshold, it's coming right at 91.37. So we're basically gonna say 91.40. That is your entry to the upside. There is sell stops here, right? Same applies on these two equal lows. We've got sell stops, you see. So that's the structure that you have to be anticipating. We've got a fair value gap on H4, but we also have a huge fair value gap on daily time frame. So market has to rebalance, especially in here. You see this area here in price action. There's too much of a gap here. Let me highlight the price action that I'm talking about. See, from this low to this old high here, this gap in price action is too wide open. It has to be rebalanced. Market has to rebalance that price action. So expect, when price comes inside this range, expect price to find support and go long. You see, so that is it regarding dollar index. We are going to be looking for long trades only on dollar index. Now coming to EURUSD, right? EURUSD, first things first, let me see the COT number, right? The non-commercials, they've taken profit on their long exposure by about 22,000. They're no longer long on euro, and then short, they've also cut by about 20, so that's 24 by about 30,000. You see, the non-commercials right now, their numbers are going to be a bit misleading, but the commercials, look at the commercial numbers. There's only a reduction about 1,000 in their long exposure, and in their short exposure, they've taken profit off by 60, 565, 560, by about 2,000 positions. You see, they've reduced their short exposure. Sorry. So when you look at the overall percentage, you can clearly see longs, they've been reduced, but their short exposure has actually increased, meaning euro is going to be under pressure, right? And when you look at their open interest has jumped by almost 50,000 points. That's like 6% change from previous week. So euro is bound to find pressure. Euro is definitely going to be under pressure, guys. Number one, the ECB, when they met before the Fed last week, they didn't give much of hint that they're also going to be easing on their bond buying in Eurozone, which means they're still looking to help the Eurozone in terms of stimulus action, central banks printing more money, ECB and all that. So this is gonna weigh in on euro big time, such that us as traders, we need to be hunting for short trades on euro, right? So short trades, from which level should we be anticipating euro to find resistance? Number one, this old bullish order block. That's number one. Number two, we also have this old bullish order block, right? These sell stops have already been liquidated, right? We don't need to must change that price action. We also have another last down candle there, which is our bullish order block, and then we've got this here. This is now interesting. That's the one that has provided support when price traded through. Now we've got a fair value gap inside here, right? So this low has now changed. It's up until this guy. Let me just mark this, guys. Let me just mark out this price action, and then we've got this gap here. These are your targets. These discount arrays that I'm marking, these are your targets. We are going to be hunting for short trades on euro. So these discount arrays that I'm marking, you can see we've got a fair value gap here. Let me just get rid of this guy. Then I just put him right there. You see, we've got a fair value gap and the liquidity void. This is your target in terms of your short positions. Now, where are you going to be hunting for those short positions? We also have a fair value gap here, right? Expect price to face some massive resistance there, but your main area to focus on will depend on how dollar moves. But this level here is crucial. This could provide us the target, as in our entry target. Let's see the 50% mean threshold. Where is it coming in at? So you're looking at right around $1.19,700. right? $19,700 is going to be your optimum entry for short trades, but we cannot disregard this old low, right? This old low, which is coming in at 1.19418, right? This low and this old high, right? There's a gap, fair value gap there, which is going to provide resistance to price, and then we can probably see a huge drop to the downside. But now this old bullish order block, price broke to the downside. So when price returns, you are looking to be a what? Looking to be a seller, right? In this range, targeting this fair value gap to the downside, because we're expecting price to fill up this void and probably reach out for the sell stops right here, or just in this bullish order block. So EURUSD expected to be under immense pressure. 1.19700 is the ideal entry for shorts, but now we need to take note of the high of the week. Remember, we are now in a bearish weekly order flow. We've been already for quite a while, so expect the high of the week to come in on Tuesday or Wednesday during London or New York session. Take note of the high for Tuesday and Wednesday if you want to be in profit, right? The moment you see a high being formed on Tuesday and price trading away, you see, that is your trigger to say, okay, no, price might not revisit. Then you look at price action, read the momentum, you see, understand the momentum that price has got when it's moving. The moment you're seeing big bodied candles, right, going to the downside after creating a high, you short the market with your stop just above the high that has been what? Has been formed. And if that high is coming in coincidentally with these old bullish order blocks, the much better. You've got confluence there. And remember to be looking out on how dollar index is what is doing for you to make that decision on EURUSD. So when we go to the H4 chart, you can see we've got a what? A bearish order block right here. We've got a bearish order block on H4, and we've got this fair value gap, the low of the order block and the high of this candle here, the high that's coming in at 1.19562. Let me just mark that out. You see this high here, this high to this low. If I'm to place my fibs there from this high to this low, right, you can see where is equilibrium up until 76%, right? That's a range of price which is in premium range where you can be a seller, right? The moment we violate this high, see, the moment we violate this high to the upside, right, then price would have retraced what? 100% of our swing point. Then we'll be taking note of last week's high to this week's low, right? This week's low, and then we will probably see our retracement levels for entry. But as of now, we've got the high from Thursday to the low of Friday as our swing point, right? And we're expecting euro to be under pressure, meaning this level here, 1.19555, is also ideal for short trades right here. Ideal for short trades. Where is your stop loss? Just above here. And targeting what? Firstly, you're targeting 18460. That's your target. Or target number 2, 1.800. You see, so expect euro to be under pressure. Firstly, from the 18, what is this? 19587. Yeah, 19587 or the 1980. 1980 or 19700. So that is this range in price action for you to be a seller. You see, so price will probably create a new high tomorrow. Might not be above these price points here, but the high that is going to be created tomorrow, expect it to be somewhere near this fair value gap on H4, or it can be on Wednesday that we create that high. You see, it can be on Wednesday that price trades into this range here to create a new high before we see price drop massively to the downside, because I'm expecting the downtrend that we saw from last week to continue. You see, yes, we're going to have reverse retracements. Price cannot just drop like a stone or something. We are going to see some reversals before another push to the downside. So looking at Euro USD, we're going to be bearish, only be hunting for short trades. Now coming to pound, then pound becomes easy, guys. We don't need to waste much time. Your homework is to define the premium array that you are going to be shorting the market from. Already we've got one here. Let me just mark this out. We've got a fair value gap and a liquidity void right here. See this range in price, it has to be rebalanced. If this is violated to the upside, then we've got the next in line right here. So expect price to find resistance in this range. Now I've marked this premium array on daily, right? Now the reason why I'm not looking at weekly, guys, is because you already know the levels that we marked from the monthly to the weekly. This is basically us following through our analysis that we've done. And if you are new, yes, it could be ideal that you watch the previous weekly forecast, maybe from about 3 to 4 weeks from now, for you to really get in sync with everyone in the group. So now expecting pound to find resistance in this range. Now I'm gonna look at the COT number for pound. The non-commercials, they've taken profit on their long and on their short exposure. So this is to be expected, guys. With what we saw last week, there's going to be a huge discrepancies in the number, especially from the non-commercials side. They're taking profits on both sides, but massively on their short exposure. Now when we look at the commercials on their long exposure, they've taken profit of about 6,000 positions, and on their short exposure, not much, not even 1,000. You see, yeah, maybe just above 1,000 points, right? Meaning they are looking to go short. Overall, the commercials have reduced their long exposure and they've increased their short exposure. Now when we come to the pound, right, on daily we've got this fair value gap and liquidity void to the upside that was created when market was dropping because of FOMC and all the shenanigans from last week. Now expect price to find resistance in this range. Price will not just blast through here. Yes, we're going to get a retracement. We've already had a huge retracement today. How many pips is that? Since market open, 127 pips. This was to be expected because we are in a higher time frame bullish order block, right? Now on H4, you see we've got this bearish order block right here, right? And we've got this high that was created when was this? 17 June. That was let's see, 17 June, that was Thursday, right? Thursday. And then we've got the low that came in on today. If I'm to place my fibs there, my fib retracements, right, low to high, you can see where my equilibrium starts at. Right now we've already blasted through the 50% mean threshold, and we've got this bearish order block here. You see how price is now meandering there, like it's losing momentum. If we go to H1, you see how price has lost momentum. You see there's no more momentum to push to the upside inside this H4 bearish order block, right around 1.39231, the 62% retracement level. Now in terms of premium, you're looking for price to be above the 62% retracement levels. Right, you see this range in price. Expect price to find resistance inside this area. Price will likely find resistance. Already we've seen momentum dying down on H1 on this chart. We are looking for price to go to the downside. I'll be expecting this order block to be the ideal area for you to be a short trader on pound USD. Expect price to trade just above 1.39800, and then from there expect price to drop to the downside, right? So for an aggressive trader, current price action is ideal to short, but make sure your stop is well above 1.40253. Now what that is going to do is it's going to increase your risk. You're going to have a risk of almost more than 110 pips, unlike when you short just above 1.39800. You're going to have a risk of less than 50 pips. So yeah, I'm going to be looking for short positions on GBPUSD. Your homework, your assignment is to highlight further premium areas on this chart here. You can see above 1.408, 1.400 on GBPUSD, we've got buy stops, right? We've got buy stops there, and then we also have this fair value gap which is almost filled. So expect price to fill up this gap all the way into 1.39613. Then from there you are hunting for short positions. So yeah, that is pretty much about it for this week. I'm not really going to look at gold and USDJPY. I leave that to you guys to do your practice and ask questions. So gold and yen, you can see gold massive drop down there. You see these sell stops, we highlighted this I think sometime in April, and all the price action that we marked finally came to fruitful. We don't really need to repeat this. We have done it already on the weekly recap, and then we saw a huge drop. And then USDJPY, we're seeing price rallying already on the weekly chart, but after trading into discount, you can see we've traded back inside a fair value gap, and price found resistance right there inside this H4. Let me go to daily and then you see what I'm talking about. Just a quick note. So we got this low here, right? So price eventually filled the fair value gap. So we had this low, this candle here. This is for the new guys. Raul, take note. See this candle here. Then we had this high. So this was a fair value gap. You see, that was filled here. Price came back again, but look at how price massively moved right here. last week, Monday, I guess. Yeah, look how price massively moved away from this daily bullish order block. You see this? This is a daily bullish order block right here. I'm on daily. Now, if I go to H4 in this candle, this candle's price action. So this is Monday, Friday, Thursday, Wednesday, Tuesday. Last week Monday's price action on USDJPY. If you go to H4, there's a bearish order. There's a bullish order block right there. Here we are. See this? There's your bullish order block. And look where price traded to today. Price dipped right into the 109.70. Might have missed the low. 109.710. That would have been your nice long entry to the downside when this came to the upside for a reward of 53 pips. So this is what I want you guys to be doing, highlighting these levels and taking note on when to get in. You see, like this candle here, let's go to H1. See, this is H1. See how price dipped into the H4 bullish order block and found resistance after taking out the sell stops on these two equal lows here to your left. Then boom, market moved to the upside. Very easy. It doesn't have to be complicated. Now, something to take note of. Take note on Euro GBP. You see the weekly chart. Can you see the current candle for Euro GBP? Right? I'm gonna go to daily. You see the current daily candle on Euro. Then look at the current daily on GBPUSD. Look at the current candle on Euro USD. Then you look at the current candle on Euro GBP. Like I said, Euro GBP always precedes Pound USD and Euro USD. We are definitely going to see Pound USD, Euro USD flash to the downside. Selling opportunities are on offer right now on Euro USD. Price is trading into premium on both assets. Expect them to drop like how Euro GBP is doing. Many pips? No, I do not know that. So yeah, that's pretty much about it for this week, guys. I hope you have understood perfectly what I was giving out to you guys, and make sure you do your homework on gold. Define the levels, maybe the premium levels that you're going to be selling gold from. I'm not sure. And also NZD USD, define the premium arrays that you're going to be selling from, and also on Aussie dollar. Aussie dollar is quite easy, very easy right now. You see, we've got the fair value gap right here and the liquidity void. When you go to lower time frame, you can see, you see most of the charts right now, they've got almost the similar price action. Expect price to find resistance after filling this fair value gap. We have already done that already here. You see, price traded, filled in the fair value gap, and then boom, dropped 119 pips. So this has to be something which becomes easy for you to analyze. Even to do it in hindsight, you should be able to highlight these levels. So yeah, let me not waste much of your time, guys. Already I've been speaking for like 45 minutes now, and yeah, I know most people are not even gonna watch this whole analysis. They'll be just skipping through, which is not ideal. You must watch the complete video. So yeah, if you haven't subscribed to the channel, I urge you guys to subscribe and make sure you've got the notification icon selected so that you don't miss any episodes that I upload. And for those who haven't joined the mentorship, unfortunately you are only going to see this video Thursday London Open. Right now it's going to be immediately available to the mentorship just before New York close. In the next probably 20 minutes or so, this video will be available, and then you can digest the content and make a decision on how you're going to approach the week. So yeah, with that, guys, I wish you good luck and happy trading.